Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today's Wednesday, July the 16th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band, and we are looking at the ES in a scan of news across the board. It seems a little bit muted. Goldman, best quarter of trading in the firm's history. No kidding, the volatility has just really been very, very good for these algorithms that buy the valleys and sell the peaks. So very good movement there. I haven't dug into the details there, but that's all we're staring down. In an homage to my dear friend Marcia, she and I were talking yesterday, and interestingly, she's put up these IVs based on the day of the week, and I absolutely love that. So I'm going to move that. We're still in naked chart land only because I really want to press the importance of understanding price action and price flow. Opening range this morning in the ES, low 6,264, high 6,277. What did we do? We came to the top of the edge, stayed there 5 hours, came to the bottom of the edge, had a liquidity break or a stop run, right? Where traders know this is what support looks like, just like yesterday, but the sneaky traders say, hey, I'm going to run after all those stops. It's going to stop all the people that were going along, and then I'm going to turn around and run it right back up, right? So this area right here represents a liquidity break that moved to the north. And so where are we going? Probably to the next area of heavy congestion, which is 1, 2, 3, 4, 5 hours long, maybe 6 if you count part of that candlestick formation. But that's what we're staring down. Implied volatility to the upside, 63.08 for today. For the downside, 62.50. Those are my numbers. You know, what's the storyboard? We're still in a range. Buy the low end of the range, hang on, sell the high end of the range. Now, doesn't mean that it can't get all choppy in here, but if you're looking for that long-term trade that you can hold for several days, this is what it looks like, right? I would say 63.08 to 63.05, a pretty good target, though the point of control is 6,297. Let's take a look at the NQ. I did not put these numbers up in the IV for the NQ today. I will a little bit later. But I'm going to remove all the horizontal lines so that we can stare down what's going on here. So NVIDIA gets to sell chips. Everybody's on the chip craze. People are starting to buy China again. And up she goes, right? Up she goes. Sideways formations. Opening range in the NQ. Pretty wide. Let's see what it looks like. Low, we've got 22,973 or so. High, 23,034. Notice liquidity grab up here, right? Everybody being short. High, low, lower high, lower low. Old resistance clearly showing. Push up and out to bring the buyers in, and then jams them all the way down. Same kind of thing on the bottom. They know support action, old resistance here that becomes new support, forces them down into the next line of support where more supply shows up. And so we'll be looking at that 22,930. So we broke the high of the opening range, we broke the low of the opening range, and now we're right back in the middle of today's opening range and yesterday's opening range. So what are the traders likely to do? This could easily be a megaphone, right? Pushing us up into heavy congestion around 23,094. That's my guess, right? Notice the big Fibonacci here, swing low to swing high, and the 50% range. We lost the zone and then immediately recaptured it. You could chase a trade up over the hold of that area into the top of this range. This 23,030 area is a place I would say you know what? That's a place to take profit. That's a place to take profit. All right. Now, if we wanted, just for grins, to shift that Fibonacci, we can see that the new midpoint is both the point of control and the volume-weighted average price for the range, and that number is right around 22,987 to 23,000 even. I would not be picking trades up here unless you were on the edge of some wicks and then you took it right into resistance. This is way too noisy. The volume point of control tells us where most people are arguing. Upside drift, again, 23,100 potentially, maybe more. Downside drift, we still have a gap fill, and that would be 22,890. Let's look at the YM. And thank you, folks, for telling me you like the SPY. It's going to be back today. Opening range for the Y. Look at this move. Bam. We need to go to like a daily to see what's going on here. This looks like a break. Now, it could be a rotation right back into the range, but with these lower highs, the bounce here is a sell zone. So selling pressure between 44,551 and 44,700, that's where my money is for the short. Where are we? Below the value area of the recent range. See this? Range, range, range. Break of the range, collapse into the range. Break of the range, collapse into the range. Big break of the range. If we do not break right back into the range, this region, 44,400 to 44,500, if we can't get up and stay up there, this is the beginning of a rotation down, right? This is nasty. So I'm gonna put an alert here. Yeah, that's super important. Value area low. It won't let me do an alert there. I'll do it later. But that's what we're staring down. Opening range formation, high, 44,207, low, 44,126. We held it for 5 hours, broke below, again, liquidity grab or a stop run, and then a punch back up into resistance, which is old support, 44,330. Pretty nice, right? But that's a sell zone right there in the YM. Could it pull back and bounce again? Yes, I'm thinking it moves to that, tries to get back in the value area, at which point we've got a trade that we need to consider. I think it's the short. I do. First sign of a short showing up in a hot minute. Let's take a look at Bitcoin. Micro Bitcoin now trying to build a ledge right here above 115. As you know, I have an order sitting down here at 115,145. Literally, that's my order. I have another one at 14,030. Obviously, I'm cost averaging in because I believe it's going to hold. Hey, guess what? It missed me by $1,000. Woohoo! Yeah, I wasn't happy about that. However, we are noticing a little bit of sideways consolidation. Here's the opening range for July 10, July 11, July 15. Actually, this is July 14, July 15, and then today. So they're trying to build, here's the volume, trying to build a region in here. Dips are clearly buys. However, this could either be a flag, a bear flag, or just more sideways consolidation. I don't love bear flag action, right? Anything I have to draw a diagonal on, I am atrocious at drawing trend lines. I like to look at support and resistance and support and resistance. And so what's it telling us? Near-term resistance right here, 119,480. Pull back into the opening range high is my thought, and that is 118,131. What is that opening range, by the way? High, 118,175. Low, 117,470. Pullbacks or buy zones. Now, you want to take a short here? I don't. I don't. Look at this. They're still building inventory here, right? So as long as they are holding this ledge, old resistance, new support, they could have a stop run or a push to test and knock out all the buyers that have been in here for the last 4 hours or so and move higher again. I don't want to short this. This is not a formation that is shortable to me. Very top, yes. Very tight stop turns into a stop buy into the next area of congestion. But yeah. So either it comes down to me here at the point of control where I can take it, or I don't really take this trade unless I'm scalping. Dips are clearly buys, but we are getting long in the tooth. So it could be a pretty good sized dip. You want to be careful. Speaking of pretty good sized dips, holy smokes, man, oil bulls are having themselves a tough time these days. Now here's the storyboard. We are still well over low action from the past. Very big ledge being built right here. Big collection of inventory between June 23rd and July 2nd, right? A lot of inventory. Everybody comes in and tests this 65.20-ish area. Let's see if that holds us as a buy. I'm going to put a box around that. Take a look at this inventory accumulation event, right? Could there be a liquidity break or a stop run into here? Yes. So you're going to be a little bit careful, right? A little bit careful to realize this box is much wider, almost twice the size. And so if it loses the edge, you got to be out. However, last time it was here, it spent 1, 2, 3, 4, 5, 6 hours trying to hold this area. Let's see if the same thing happens, right? Opening range, very tight. High, $66.87. Low, $66.73. Now, Andre at Edgeful has some stats about opening ranges that are very tight. I just don't know them off the bat. We'll see. All right. So here we go. 66.24. Next line of resistance, if it breaks out of this box right here at 65.89. I don't think I would be mad at a long at 65.40 with about 30 cents of a stop. Now, it's $10 a tick, so maybe you ought to try some micros, but I do like that trade. We're at the bottom of a sticky range. We do know the administration wants oil lower, so my thought is the following. If it bounces and then fades, we could easily continue a breakdown here. Oil looks precarious. Gold. Oh my goodness. Look at this noise. Yeesh. All right. What? Ugly is what I have to say. Very ugly. So, value area high, 3,363. Value area low, 3,324. High, lower, high, low, lower high, lower low, lower high, lower low. Okay? That's my suspicion. My suspicion is that this isn't a fade because the dollar is in a bounce. Right? We'll see how the dollar does, but I suspect we are in a downward formation. Opening range, high, $3,333.70. Low, $3,329.40. What happened? We broke out of the opening range, came in. Looks like we hit the midline of that opening range for support. Always important to look at that 50% area. And then we bounced to where? Yesterday's opening range. One of the reasons we like to measure these opening range events. So let's move that, and 3,350 looks like support. What are we doing here, though? A little bit of inventory accumulation, right? Accumulation, distribution, not a ton, so we're waiting and accumulating some more. You're going to see buyers come in at the volume-weighted average price here. That's around 3,340. Old resistance puts us down here at 3,338. Could be the buy zone, but I would prefer to wait for it to just retrace the entire thing. Try the buy zone that stalls out at 3,343 and then collapses further into the bottom of the range. The trade, old support, new resistance occurs at this area, $3,349, or the failed retest. This is a look above and fail. Failed retest at 3,347. That being said, 3,342 has to be a target. It has to be a target because it is the volume weighted average price. Point of control way down here at 3,333. Bounces or sell zones here. That's my thought. Now, if for happenstance it doesn't lose 3,323, we're still range bound. And finally, SPY. We haven't looked at SPY in a couple of days. Big bounce. Whoa. Okay, take a look. See this? Range. Buy the low end of the range, sell the high end of the range. Take a look. A tremendous amount of volume sitting there. Look at this. Look at this volume formation right here. So a ton of volume. This is why you want to be careful where you put your stops. And even if you're careful, folks, sometimes you're going to get your stop run. Don't be afraid. If you look at the past and go, okay, support, old resistance becomes support, hold support, hold support. This breakdown is a stop run. How do you know it's a stop run? Because it immediately recovers and begins to run. In real time, taking this trade, if you take the trade, your stop can be at the low once it recovers. So it's very tight because it could be a continuation down. But you can see very often this is the sort of thing that happens. They come in, shake you out, you watch it turn around and move forward. Don't get frazzled by the shakeout. Remember, you're on your bicycle, you hit a pothole, you fall off, you get up, you get back on, and you're off to the races. Just don't have so much at play that you give yourself a gaping flesh wound, as opposed to, a paper cut. It hurts, but you're not going to die from it, okay? Point of control, $623.60. That's a great resistance area. Volume weighted average price, $622.50. Opening range, high, $623.97. Low, $620.91. So about $1 wide. But at the end of the day, folks, we're in a range. And there's a great measure of trust that you can put in a range to say, hey, I'm going to buy the low. I'm going to sell the high. You come in with a low amount of orders, right? Maybe one contract. If you're looking at options, if you're looking at the futures contracts, you pick, not that you can buy a spot future, I'm talking in general. You can say, hey, I'm going to add to my position as I move to the north. Low risk here, add to the position as it continues and take profit where it has old resistance or old support. Okay, that's it for me, folks. I'll see you on the stream. Remember, Benzinga Pro Midday Moneyball Report is on the docket today.